What is up, guys? In this video I am going to be showing you how to go through an income statement. Now, this will not be an exhaustive list, however it will be a basic guide, more like a foundation for you to build off of as you learn more and you start to get more into things. So before we get into the numbers, let's talk about what an income statement actually shows. An income statement shows how much money a company brings in, how much it spends, and how much profit it makes over a specific period of time, which is normally a quarter or a year. To make this easier to understand, I'll be walking through AMD's income statement. Revenue is the total amount of money that a company brings in for selling its products or services. Now, when I look at revenue, I care more about how the company is performing year over year rather than looking at the last quarter, for example, because one quarter is just giving you a very short time period compared to how the company is performing year after year after year. You can get a better grasp of what the trend is. So looking at AMD, we can see that it has been steadily increasing. It went slightly down in 2023 to 22 billion from 23 billion, but over the last year, 2024 went to 25 billion, and then the trailing 12 months it would be 32 billion. Now that TTM, that is trailing 12 months, the last 12 months from the present moment. So we can clearly see that demand is increasing rather quickly. Next, let's look at cost of goods sold, also known as COGS. That is the direct cost of producing what the company sells. This includes things like materials, manufacturing, and production costs. COGS is important because it tells you how expensive it is for the company to run its core business. For AMD, cost of goods sold was about 13 billion in 2022, 12 billion in 2023, 13 billion in 2024, and roughly 16 billion on a trailing 12-month basis. And the problem with the relationship between revenue and COGS is, if COGS is growing faster than revenue, then the company is making less profit, which is obviously bad. So you want to be making as much money on each dollar of sales as possible. That leads us into gross profit, which is revenue minus COGS. And this shows how much money the company keeps after covering production cost. Gross margin is gross profit divided by revenue. It tells you how profitable each dollar of sales is. Higher margins normally means higher efficiency or better pricing power. Since revenue grew faster than COGS, gross profit increased. Next, we have operating expenses. Operating expenses are the costs to run the business outside of producing the actual product. This includes things like research and development, marketing, and administrative costs. This tells you how efficiently the company is being managed. Much like revenue, COGS, and gross profit, we can see that operating expenses are on an upward trend. Operating income, also known as earnings before taxes, interest and taxes, or EBIT, is gross profit minus the operating expenses. We clearly see that the operating income dropped very sharply in 2023, which tells us in that year that profitability was being pressured. But in 2024, they had a clear rebound, which shows that there was a meaningful recovery in operating performance. And in 2025, this year, we saw that they were doing even better in terms of operating income. Not by an extreme amount, but a clear improvement from 2024. Pre-tax income is the income before taxes. Net income is the profit left at the end. Net income reflects everything that we've walked through so far. The revenue, the cost, the operating expenses, the interest, the taxes, all of it. So, when operating expenses or operating income or COGS revenue moves sharply, then of course net income moves sharply. That's why it's important to understand why those numbers are actually moving, which I'm not going into a lot of detail right now, but more than just knowing that net income moved or knowing that revenue moved or knowing that COGS moved, you want to know what is driving those numbers to go up and down. AMD's net income was about 1.3 billion in 2022. Then it dropped to around 850 million in 2023 before rising back up to 1.6 billion in 2024, which is almost double. And then now 2025 is almost double again at 3.3 billion. So net income has been definitely improving the last couple of years for AMD, which is to be expected because we all know how with AI what the potential that AMD has. The thing is, for investors, improving profitability means that the business is converting the revenue into actual earnings. When profitability weakens, risk increases, which means that there's less room for error. When profitability recovers, it opens the door for reinvestment, shareholder returns, dividends, those type of things, debt reduction, all of it. Now, earnings per share is the last thing that I'm going to be talking about in this video, and that is net income divided by the number of outstanding shares that the company has. It shows how much profit belongs to each share. The tricky thing about earnings per share is that even if net income grows, the only way that EPS improves is if it's not diluted by more shares. Even if total profit grows, investors don't benefit unless EPS grows. When EPS starts to improve, that's one of the clearest signs that the company's profitability is improving. All of these numbers matter because they show whether or not revenue is actually turning into sustainable per share profitability. So, in conclusion, the income statement tells the story of the company's profitability. If you understand this, you're already ahead of a lot of investors. So that's all I have for this video. If you made it this far, please hit the like button, subscribe to the channel if you're new, if you want to see more content like this, and I'll see you in the next one. Peace.